Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So, as you could see, yesterday the grabber on the dollar index have appeared right in time. So, based on this pattern, it has led us to make the better analysis of the situation, recognizing the bullish changing of the sentiment, recognizing the bullish sentiment, and that market could go at least to the previous top right there. Those of you who have read the Fed minutes probably have recognized that they were not as hawkish as as they intended to be shown by some Fed members. So if you remember in the weekly report, we have discussed some statements from the Bullard, from the Kashkari, from the Collins. All of them were mostly in favor of the tougher policy, higher interest rates, and there were clear hints on reaching of maybe 5.25%. But recent Fed statements minutes shows that more members suggest that maybe it makes sense to decrease the pace, or in some absolute dovish members suggest that maybe it's even we need to stop rate changing and see what will happen. So that's will be definitely bad thing for economy. Because inflation stands higher than the interest rate, and with the stopping changing interest rate, this will definitely have the negative impact on the economy. But it seems that Fed is coming to the sale of their ability to control the economy, control the interest rate, because beyond of this threshold, it might be destructive processes could start more obvious, as actually they already are going, but more obvious, and then they could accelerate, and that's why they are just can't lead rate to the logical level somewhere near the inflation. So we will see, but it's starts smelling like the capitulation. Maybe not immediately, but somewhere in the beginning of 2023 probably. Anyway, this long story we talked about this weekly report. Speaking on the short-term technical moments, these two factors has led market to go higher. So today is the holiday in the United States. Happy Thanksgiving, by the way. Everybody, to all Americans, our farmers, spend this time with your family. It's really a good reason to stay near your close ones and just take some rest. Market will be probably thin today, but with this recent rally, it seems that euro and dollar index has really getting good chances to form trend bottom on the monthly chart. Just to remind you concerning about upward standing targets, to give us the butterfly, Brent bottom, market has to reach the monthly major 3.8 fib level. This is 105.78. In general, we have strong monthly weekly confluence around resistance around 105.78, 105.92. This is very strong level, and that potentially very attractive for taking the short position. But currently, the question whether market will be really able to complete it, because it's more than 100 pips to the upside. And another problem for the year is that it stands overbought on the weekly chart. It has relatively it could relatively free keep going higher until the previous top, but once it will reach it behind of this top, above this top, market will have to struggle overbought again. So you could see on the weekly chart, by the way, right there. So we have shown you in the weekend. So and we will hope that definitely market will reach this level, but some resistance exists for this process as well. On the follow time frame chart, what we have, market has completed necessary conditions on the bullish side. Recall what we said, market has to break this trend line that we've got yesterday discussed, and currently market has made all necessary technical confirmation of the bullish reversal. First of all, if we suggest that this is head and shoulders, the top of the right arm has been taken out, and even more as take a look, market already you raised this top. So this ABCD pattern is not valid anymore, just because market created the top higher than the C point. And it tells you that the major retracement with this ABCD action is over. So what does it mean? It means that this stuff is a continuation of that one. And this first moment. And second moment, we should not consider any fib levels that stand below it for position taking, because this is the new extension leg. Since major retracement already is over, it should not be any other deep retracement anymore. So market could show some minor pullbacks here, some retracement inside of this swing. It is possible, but not outside of the swing. If it will happen, it means that market is not bullish and attempt to go higher has failed. So since we have some reasons to suggest that it's not so, basically on the dollar index and its grabber that's just taken out of this top, so we're suggesting that this is extension mode of this leg, and that's why we're watching only for this level and the levels that stands inside of it. So particularly speaking on the hourly chart, take a look. We have first level 103.90. Next one is very interesting. This includes previously necklines, was previously support, resistance, now it's again will be support, and stands precisely in agreement with the confluence of 103.54, 103.62. This will be the confluence support area and additional neckline. This is very great area to hiding the stop below it. So probably position could be taken somewhere around the nearest level if the market will reach it. This level looks nice to consider for stop placement. Well, concerning the targets, nearest target stand based on this local ABCD pattern on the hourly chart 105 sharp. It's right there, slightly above this area. Since market is overbought, so well, it's reasonable to suggest that if market could reach it, it stands relatively close to the previous top. Andreas specified today that nearest target now performance based on Elliott waves analysis 105.30, somewhere around it. We need within the rest of November, the market will reach 105.78 to give us great pattern on the monthly chart. So let's keep watching. The nearest target, we would suggest that our prediction more or less completed if market will reach at least 105 area. So then we will see what will happen next.